Hello, everyone, and welcome back to the G22 Report. I'm your host, Johnnie Market. You all know that drill. Smash that like button. Subscribe if you already haven't. Give me a follow on Rumble. Just a disclaimer, nothing said on this podcast should be construed as financial investment advice, just my thoughts, my opinions on the market. Read more below. And let's get into today's stuff. So, start off briefly with the economic data, but markets being forward looking, I don't think it's really controlling the short term, but global manufacturing S&P that is 51.2 above the consensus of 50.1. ISM manufacturing 50.9 above the consensus of 49.8. Construction spending up 5% over 2. If you look at it, this is a very good set of data. We have JOLTS coming open up this week, and I think the jobs numbers are coming out this week too. So there'll be a good amount of data. Yeah, the unemployment rate, that will be coming up. And speaking of Trump tariffs, this was actually interesting. Nasdaq and S&P Dow par earlier losses as Mexico and delays tariffs. And now I've read that Canada is delaying tariffs, but he might be doing China and the EU. This is what I've been saying earlier. I don't think this is that big of a deal. Even if he did pass these tariffs, I don't think it will do anything to the economy or nothing much. His last tariffs, which, he argued with Joe about, they even admitted they were a success. So I don't really uh, think it's that big of a deal. I think it's just short term. Uh, and even this, if you want to show that Bitcoin's a bet on the economy, Bitcoin slid below 95 last night as overnight as risk off took over the wake of US president starting a trade war. Wouldn't a trade war be good for Bitcoin? Why would, Bitcoin's this, disaster hedge that they said, why isn't it? Of course, Bitcoin, I believe, was up today. Yeah, it was up. It went up for uh 4,000. So, but yeah, it just goes to show it's a play on the stock market. But speaking of stock market today, it was up, it was down around 600 points today, the Dow. It's only down 122, S&P 500. I expected to actually open tomorrow high because now Canada apparently has. But yeah, if you look at this right here, stock market's still down. I think this is temporary, but wow, broccoli sold at Walmart recall. But yeah, this isn't that big, but once again, the video. Look at this again, she knows. It is down today, 116. Look at this 5 day. Look at that right there from 121 to 116. 1 month. Look at that. It was at 140 and now it's 116. Let's do 6 months. It's up on a 6 month. But look at that 1 month. She knows Nvidia. But in terms of gold, that was up on today. And I think with all this talk, and none of that, what people don't realize is Trump talks about being a low interest guy. He's already challenged the Fed. I think he's going to get his way. And gold's going to do well. If you look at gold right now, uh, I'm just going to do gold for now. This is the COMEX. And, this is after hours, but this was up 20 to $25. There's no like what it shows for today. But if you look at it, let's see, around 8 o'clock. What was that? 2 8. No, that's not. It was up about $20. 2 8 2 2,800. That's where it was around, and it's just come up. So it has sold off because of the trade tariffs, but I think you're gonna see it keeps going. This is bull market behavior. And let's see what Kiko says. And I think there'll be one more run up. I think this is sort of the beginning of that run, but it's gonna go more. And the reason it's gonna go more is because there is a huge it's either going to be an inflation run or there's going to be some sort of monetary stimulus where they're going to really lower rates. He's 2814. Let's see if I can get. Yeah, they don't have like one of those, but yeah, if you look at it, it sold off and then it really bounced back, but it did sell off a little. But I think with this is when I think they made the deal with Canada and it started selling off some. So I think gold will probably go down tomorrow. But yeah, this looks like bull market action. You look at just even 6 months, just looking at comes back down, goes down, and it's breaking out. It's probably consolidating to test that, go up more. So. That's all I have to say. Just some things in the economy I wanted to talk about that I think will eventually start showing up in the data. But more Americans take on a second job or side hustle. They come at a cost. This is the highest level since 2019. Of course, 2020, and I don't think I need to do more. So if you look at this, and this is what I said, I think more honest stuff, honest reporting is going to come now that Trump's president. 2024 was they put everything on hold. And to show the more collapsing side is look at this. American ratings of U.S. professions at a historic low. And if you look at this, we're just going to go through real quick. So the positive professions are nurses, grade school teachers, military officers, pharmacists, medical doctors. Think what you want. Those are the majority positive. Net positive, meaning like they're barely positive. Daycare providers, funeral directors, police officers, auto mechanics, clergy, and judges. That's it. Now here's the negative, which I thought was funny. Bankers, go figure, local office holders, nursing home operators, lawyers, newspaper reporters, state office holders, business executives, car salesmen, advertising practitioners. A majority negative TV reporters, Congress, and lobbyists. So if you look at this right here, this just goes to show, I mean, part of this is the crisis of competency. I think classism, arrogance, has gotten, since I was a kid, just unreal, in rising. So trust in medical doctors, though, even though it was majority positive, falls 14 percentage points since 2021. And even daycare providers, pharmacists, nursing home, all operators, they have dropped below their average pre-pandemic ratings now. They had a post-pandemic bump, but so look at this. Judges, a 10-point decline. Police, it's variable. I feel somewhat bad because of the bad press they've had. And clergy, I think that's just less religious. So, but if you look at this, all now change points. Medical doctors have the highest decline with 14, judges 10, police officers 9, daycare providers 8, pharmacists, clergy. The only profession that actually had a bump was right here, state office holders. Ironically. And you look at it, 12 to 14. So that is a really, really and then And then if they do changes this century, going back this century. So this change was since 2020. But if you're going through this century, which is the year 2000, clergy, judges, cops, grade school teachers, medical, pharmacists, bankers, TV reporters. And if you look at it, the only group that actually increased was auto mechanics, blue collar workers. And this is what I'm saying is that we're going through a crisis, a crisis of companies, morals, ethics. And this just shows that the economy is from the inside rotting. If the economy was doing well, professions ratings would be the opposite of this. They would all, uh, ratings of honesty and ethics would actually be going uh, higher and not lower. People would, and then this is the other thing I was looking at, which just goes to show new low in US very satisfied with personal life. So new low in US. So it says more people are satisfied with their life than they are with the way things are going in the country, which I don't really agree. I think some people lie to polls, but I think this is true. I mean, they definitely unsatisfied. This is why Trump got elected. But generally, people are satisfied with their lives. They're going to be satisfied voting wise. They're not going to be angry. I think they're more unsatisfied with inflation and whatnot. So, but record low 44% of Americans are very satisfied with their personal life. And this is what I was looking at. If you look at this, this was '07, 59, now it's 44. And it was right before the pandemic, 65. But as you can see, all throughout here, it was very low. And then 53, it actually ended up. You can tell that the data was somewhat real under Trump's first term because look at this, 53 to 65. But you look at this age, and I always said the only people that benefited from the banks and the stale bailouts and the stimulus and everything were older people and the banks. And if you look at it, satisfied with personal US adults, look at it, the most satisfied are 65 and older, 50 to 64, and then 49 and under are around the same. And 49 and younger, they wealth was transferred from them to the older population through asset price inflation. And so these people have a hard time paying for houses. Meanwhile, the houses they already own went up drastically. And it's sort of sad because it used to be the way serious countries were was you sort of built around the youth because that's the future of your country. But as you can see, things are not looking good right now. Some people are in Trumphoria, but if you look at the data, it's not all that good. You look at Americans, they're not satisfied. Now, people can say it's been a week or whatnot, but remember what I said, there's the commercial real estate bubble, there's the auto loans, credit card, and housing bubble. All four are going to be are going to pop soon. And that's going to be something that they're going to have to deal with. And government debts are going to explode and they're going to have to make tough decisions. And it's going to be regarding default, number one, but it's also going to be not just default, but they're going to have to cut spending, meaning, checks they write to citizens like Social Security, Medicare, and everything. That's going to be a tough thing for people to swallow. But I'm not saying it's going to happen willingly, it'll be forcefully, but these are just things to think about. So you hear all this data, the government data look good. And that's what the market cares about. That's why I'm not worried about any type of crash. Just my opinion, not financial investment advice. At least not anytime soon. But if you look at all these things beneath the surface, things are not, things are tough. And as I said, we're in the this year, later this year, we're either going to get inflation through the rate cuts, or we are going to see bad economic data. So right now, in terms of the rates, the Fed is holding rates for now. And that's why I think Federal Reserve held interest rates. And that's why I think any run will be capped. So this, we'll see what happens. Anyway, that's all. I will see you all next video. And remember the disclaimer, nothing said should be construed as financial advice. Just my opinion. So, and thoughts on the market.